The world's largest Bitcoin exchange just posted the worst earnings I have ever seen. And on top of it, their entire platform shut down today, all while investors were trying to buy the dip. And we've seen silver go absolutely crazy. And this all is connected to how Bitcoin is doing. But first, we've got to get into this terrible earnings that we've seen out of Coinbase and why the world's largest exchange is not immune, because something is breaking right now and nobody is connecting the data. Let me show you exactly how bad this is. The total revenue was at 1.78 billion, which is literally down 31% from a year ago. And they missed analyst estimates, and the analysts already had been cutting their targets all week. Coinbase still couldn't hit the lowered bar. Their earnings per share, this is the one that kills me. Wall Street expected positive 96 cents. Coinbase came in at a negative $2.49. That is not a miss. That is on a different planet. That's a $667 million net loss in literally 90 days. That's insane. Their transaction revenue, their bread and butter, came in at 983 million, below $1 billion, down from $1.5 billion last year. So it's down a $37 within their core business. On top of it, consumer spot trading fell. All of their metrics essentially are down drastically. And on top of it, their revenue is down 30%. So they're cutting costs, right? Nope. Their operating costs actually went up $1.5 billion. And the crazy thing about all of this, why I am bringing up a Coinbase earnings, is because it's all theoretically connected, because Coinbase was at Davos. Coinbase is now getting very intertwined with the elite, and we are seeing their exposition kind of fall and crumble before our eyes. I mean, something like this has never really happened before. And of course, they're the biggest company in the Bitcoin space. It's what everybody goes to buy Bitcoin and buy crypto for their first buy, because, hey, let's face it, they are an SEC regulated exchange, and people at first want that kind of regulation and want that comfort. Now, when we keep diving in, this could be, okay, it's not an FTX level right now, but this could be even more big than an FTX colossal collapse. And this could be something that it would be absolutely drastic and catastrophic if Coinbase were to fail. And I'm going to keep diving into why I think that is a potential possibility, because they've spent 1.75 billion in buying back their own stock. Literally, a stock that's down 67% or 64% from 419 and down 40% in just this year. So Coinbase is getting absolutely pummeled right now, where we're seeing year to date. I mean, it's February 12th, folks, and this stock is down nearly 40%. I mean, if you're saying that, Bitcoin is too volatile and you're holding Coinbase or the S&P 500, which holds Coinbase, it's absolutely insane, because Coinbase also literally went down during all of this, which I think is absolutely crazy, because when you think about it and you see, okay, Coinbase, the world's largest exchange, they should be operating at, a good clip. They shouldn't be going down anytime. It seems whenever Bitcoin is down, whenever Coinbase's stock is, going to be report earnings, when any big situation happens around this, Coinbase, for some reason, is just always down. I mean, it's a meme at this point where Coinbase just continually falls on down. But they had a big Super Bowl meme or Super Bowl ad, right, where we saw people essentially getting upset about Coinbase, how, they were actually had decent marketing. People were singing along, but there's videos going viral of Coinbase, essentially of people just getting upset when they found out that this advertisement was a Coinbase ad. So it's absolutely crazy that even amidst all of this, Coinbase reports a terrible earnings call and then was down, right? It was down while this earnings call was basically happening, which is insane, because, all right, well, if Coinbase is down and all of this was happening, well, they're saying, oh, let me just keep looking at the funds. Let's get this out of hand, right? I mean, it's absolutely insane that this was going on during all of this. But I think the craziest part of all of this is that even with Coinbase down, right? And Bitcoin down, the ETF inflows have actually stayed up, which I think is a positive because we're seeing, their guidance at Coinbase get even worse. 40 days into quarter one, they've done $420 million in transaction revenue. That pace is well below Q4, so it's already going down. And Coinbase themselves have said, "quote Crypto is a cyclical and experience tells us it's never as good or as bad as it seems." But when it comes down to it, the ETF holders are the guys that are actually holding the bags, which I think is kind of a positive sign and something that is good here because only 6% of BlackRock's IBIT capital left during this time. 94% held. They didn't panic. We also saw this tweet from Eric Balchunas about, Bitcoin's price being down 44% from the October's highs, and the ETFs were only down by 6.6%. So these holders that are coming in to this space from this avenue are actually holding at a better clip than, say, the Coinbase holders, because the Coinbase holders essentially promote this kind of casino type of mentality where you need to get in, you need to get out. They're obviously, their profit margin and how the Coinbase makes money is essentially on you buying and selling and moving out of those positions. So similar to Robinhood, Coinbase has started to gamify Bitcoin and these other cryptocurrencies because it's their business model. They're incentivized to do so. These ETFs, on the other hand, they charge a fee every single time when you just hold. So look, I'm not promoting the ETFs or saying this is a good thing, but these institutional holders are the guys that are actually coming in and holding these ETFs, which I think is very interesting. And you watch their user behavior on these ETFs. Well, they're holding and hodling for the long term and this is what we essentially promote in the Bitcoin space, right? Like wallets holding 1,000 Bitcoin went parabolic when we dipped below 100,000 the first time, and wallets holding 0.1 or less went down. So the whales are actually buying while retail is selling. The wealth transfer is happening in real time, and the Coinbase's own earnings prove it. Consumer volume is falling. Retail is leaving. Institution derivatives revenue was up 37%. So the institutions aren't leaving. They're just playing a different game than the retail consumers here. But on top of it, it's all seeing crazy volatility throughout the market. It's not just in Bitcoin. Of course, silver is making the massive headlines right now because it's trading like a meme stock. I mean, silver hit $121 on late January, and today's at 75%. Another 10% crash happened today, and 41% was wiped out in 2 weeks. 2 weeks, folks. And that silver market is at $4.2 trillion. So it's not a small market. And when you look at the assets by market cap, I mean, silver's the third largest asset of any asset in the world. Of course, gold is huge, but on a good day, silver might have the potential to pass Nvidia. Look, at one point at the peak, it was the second largest asset in the world, and Bitcoin was up there as well. Now, to think that Bitcoin couldn't go through the same volatility and actually start to take off the way that silver has, I think is just purely ignorance because it is a hard asset like we've seen, in this precious metals market. But this is beside the point because Bitcoin's drawdown from 126 to 67K, it took 5 months to do that. Silver did a bigger crash in days. And these people are telling you guys that Bitcoin is too volatile of an asset. So when we're looking at the Bitcoin price and how this user behavior is going, I mean, you see what's you see what's going on with Coinbase. You see what's going on with Bitcoin, down nearly 30%, 25% year to date. Well, all those doom and gloom boomers, the structural shortage people, where'd they go when that shortage was 41% was vanished? It was concentrated trade and it's getting blown up. So Bitcoin at 67K, down 47%. Sure, it hurts, but Bitcoin didn't crash 41% in a day. It bled slowly. And the entire time, somebody was buying every single dip. Now, I already showed you guys about the IBIT ETF and how, 6% of those BlackRock IBIT ETF solars were actually selling during this drawdown. 94% held. They didn't panic. The wallets holding, all these big bags were coming in. And then we have, Standard Chartered now cutting their Bitcoin price projection down. They're facing resistance because they're rebounding. And they said, oh, a wall was hit at 71K. So the retail and let's say the institutional holders are now starting to come in, and they're realizing Bitcoin's a very volatile asset. Standard Chartered has now cut their Bitcoin target from 150K to 100K today. And it's warned that it might dip below 50K first. But a few months ago, Standard Chartered was also saying it was at 300K, then 150K, and then now it's at 100K. So they're not predicting anything. They're just tracing the price down, and they're doing the exact same thing that retail does. On the other side, we're also seeing the fear and greed index of Bitcoin kind of crash on down. The fear and greed index is very low. And there's reason for that, right? Sentiment, no matter who you ask around the clock, sentiment is, pretty low in the Bitcoin space. And the fear and greed index is showing a 5 earlier today. So, when it's 5 out of 100, it's near historic lows. And every time we've seen it in single digits, these were generational buying opportunities. Now, in opportunities like this, you don't want to sell your Bitcoin. You want to make sure that you're able to keep on stacking. So if you've got Bitcoin, but you need some liquidity now, you can go to saltlending.com/green-candle or the link down below in the description, and they will give you 50 basis points off your entire loan value. They might even give you some other options here. They've got some of the best rates in the industry, term durations of 1, 3, or 5 years, and a 70% LTV. But my favorite aspect of all of this is that they got the salt shield. So if you see these giant dips that we are seeing right now when you are borrowing, you have the ability to protect yourself so you don't get liquidated. And remember to only do this with the amount that you feel comfortable with. Don't go all in and be chasing some craziness here, folks, because the ETF buyers, they're seeing this, right? They're seeing how this dip is something that, they're seeing this dip as something that they need to be holding on to. This is a generational buying opportunity. And the liquidity is coming, folks. The bank leverage ratios, that is all going to be changing here. The supplementary leverage ratios, where essentially the amount of capital and the amount of exposure that they can have, this is all changing on April 1st. So when that changed, they had January 1st that the new leverage ratios went into effect. April 1st, it's mandatory. So some banks are already starting to do this, and the government is about to shove $10 trillion into debt refinancing onto bank balance sheets. That's not a small number, folks. That's $10 trillion. Banks have to lend that out. And when they do, they need to lower rates. So liquidity will start to come. And the new Fed chair, Kevin Warsh, you'd think he'd get a job without cutting interest rates? I mean, come on, folks. Let's take a step back and say, okay, what is actually going on here? And then we've also had some interesting comments out of JD Vance and the Fed Treasury Secretary. While Bitcoin is crashing, while Coinbase posts nearly $700 million in losses, the Vice President and Treasury Secretary both came out and said that Bitcoin is a very important asset. Why defend it publicly unless they know what's coming? And I just recorded an interview that's going to be dropping soon that breaks all of this down. So make sure you guys are subscribed to the channel. But keeping on top of all of this, the 94% of BlackRock holders, they aren't going away. Bitcoin slid 40%. Now, you don't think that with the ability to sell, all you have to do is seriously just go into your Bitcoin app or go into your whatever app it is, Robinhood, what have you. All you have to do is to go into that and click the sell button, and they didn't do it. Look, it's almost as easy as going into your Bitcoin apps and selling Bitcoin at this point too. But you see the massive amounts of volatility, the swings up, down, up, down, up, down. It would scare out an average investor. But the difference is right now, the average investor, they aren't here. We're seeing it in the data. We're seeing it in the YouTube numbers. We're seeing it all over the place. People are fearful in what is going on. And the world's largest exchange is exposing that. What we see from Coinbase's earnings is simply just telling you what is going on. And we've heard rumors of Coinbase for quite some time selling paper Bitcoin, right? I mean, I've come out and said all of this, that this is a huge risk. And this is a reason why we could potentially see Coinbase, start to fall off a cliff here. Because if Coinbase is not selling Bitcoin or is not selling things, they're going to have to resort to crazy tactics. They haven't held Bitcoin on their balance sheet for quite some time. So what else is Coinbase going to do, right? I mean, they're essentially just looking at all of these different things and saying, okay, well, what is something that we can, our clients can't necessarily verify how much Bitcoin we were actually buying. Our clients don't necessarily show how much, they don't know how to properly audit these things. Coinbase has essentially just been running rampant for quite some time. And now everything's starting to come to light. And everybody's saying at Coinbase, okay, well, hey, it's never as bad or as good as we think it is. Sure, that might be the case. That definitely could be something that we see here, right? It's not always as bad or as good as people think. But as Deb is saying in the chat, fear and greed below 10, I think it's a good buying opportunity. But Coinbase is down when Bitcoin's down, right? For some reason, whenever it's like a good buying opportunity for you, the consumer, the number one consumer app in Bitcoin all of a sudden is just nowhere to be found. It doesn't make any sense. Why would it be like that, right? This is why it's important to have self-custody and show your Bitcoin a little bit of love here, folks. During this holiday season, during the Valentine's Day season, my friends over at Trezor are doing an exclusive offer for you guys. They're giving you the Trezor Safe 7 with a free wireless charger, and they're giving you a Safe 5 and a Safe 3, 10% off. They're giving you 20% off on certain bundles as well. So be sure to be visiting the link down below, and you could potentially save yourself some sats, and while also protecting yourself from the evils at Coinbase, because Coinbase was unable to buy or sell, and they were just investigating this, right? Brian Armstrong, oh, it's okay, man. Hey, Coinbase was down. Because at the end of the day, they say, all right, not your keys, not your crypto. I'm always saying not your keys, not your Bitcoin, right? But at the end of the day, right, Coinbase down, the ETFs were trading just fine. The concerns about the underlying Bitcoin, you'd probably see some disconnect, right? Because Coinbase users were unable to buy, sell, or transfer today, right? And that is drastic. When you see something like this with, the ETF inflows coming and the buying opportunity, right? Coinbase having a terrible quarter doesn't mean Bitcoin is dead. It means retail has left. It's gone, right? That accumulation happened. But this is when fortunes are made. The question isn't whether Bitcoin recovers. The question is, are you going to be holding on the way down when it does? Right? Because the ones that sell Bitcoin, they'll be watching it rip past 200,000 here pretty soon. And I've got a quote from my guy here, British Hodl, who will be I'm dropping a great interview with him tomorrow. But he said, I said, everybody buys Bitcoin at the prices they deserve. He said, no, everybody sells Bitcoin at the price that they deserve. So, I agree that the Bitcoin Super Bowl ad actually did pretty poorly with them. And I think that's interesting because Coinbase's Super Bowl ad was supposed to do well. And crypto's Super Bowl moment shrinks to a single Coinbase ad. Like, what kind of headline is that, right? It has shrunk from a multi-million, multi-company marketing blitz to a single exchange, Coinbase. 4 years after, it was bouncing the QR code. They called it the crypto bull. We had, We had FTX Arena in the NBA in Miami. All of these different things from this. Now it's looking like a bankrupt exchange, right? They had a 1 minute spot. They pled everybody's back. They turned 100 million screams. And then we just see everybody actually booing them. Like the Coinbase ad reaction was actually pretty terrible. Like, I mean, I don't know if you guys can see this here, but let's listen. You better rock your body now, everybody. Yeah, rock your body. It's so loud. Everybody, rock. I mean, look at that. They're just booing and flicking off Coinbase because, I mean, it seems like they have lost the retail consumer, which I think it's very evident during all of this. And I mean, when you look at the earnings, it just highlights all of that, right? I mean, it's obvious now that missing all of these shares, missing the numbers, it's not just, hey, retail isn't here. It's a rug pull ad. At the end of the day, like it's just highlighting where we're at. And Coinbase is starting to get in with the elites. And that's where I think that this is actually a huge problem because we've seen it, right? I mean, Larry Fink, I did a live stream on it earlier. Larry Fink openly admitted that the elites are losing trust of the public. And now Brian Armstrong, who claims he doesn't want to be a bank, they're going into banking charters. They're really pushing stablecoins in that stablecoin movement, and they're losing money and bleeding out fast. So at the end of the day, the only thing that is truly safe is Bitcoin in self-custody and getting your money off an exchange, getting Bitcoin out of what we have for, these Bitcoin banks, so to speak, right? So make sure you guys are hitting that like button, smoking that like Cheech and Chong, hitting the subscribe button for me, telling a friend to tell a friend, and be on the lookout for my great interview with British Hodl coming out tomorrow morning. And I'll catch you guys all in the next